Well, good evening, all. Ira Epstein with your metal market wrap-up. And this wrap-up is for the evening as we're here now on Wednesday. And we are now on the 31st of January, the last trading day of the month. And what a day it was. Pretty wild action today. Time's about 6 p.m. And we just had so much data going on today. So many swings up and down in the market. Pretty insane. Let me tell you what you have tomorrow morning before I get too far along here. If you think today you had a lot of data, wait for tomorrow. Challenger Group's coming out with their monthly estimate of planned U.S. Employer job cuts. Today we had ADP, and we, of course, had the Fed today. Bank of England's going to announce their monetary policy at around 7 a.m. Central Time. Jobless claims come out at 7:30 in the morning. Fourth quarter preliminary non-farm productivity data comes out at 7:30. The ISM supply management data comes out at about 9. Construction spending data, I mean, it's insane, comes out at 9. And we get the EIA natural gas storage report coming out around 9:30 in the morning. So you have a lot. But obviously the day's events all centered around Fed Chair Powell, who said in plain English, March is not when the Fed is thinking of making the cut. Now, they're not talking of risks to the upside. Everything's data dependent. And if something happened, they could be thinking it. But they are beginning to talk now about balance sheet runoff. Those discussions are there. Do they have to be a bit careful about it? Maybe taming that back. They are definitely talking, you can hear them just say it, the rate cuts. But they don't see the data being right now. They want to see that what's going to happen, inflation locks in, embeds to the downside. The other thing they want, and he said it again, they want to see a little bit more weakness coming into the labor markets. With that in mind, you can see you've got more data coming out here tomorrow with the Challenger Gray number. And we saw the ADP number today lose about 50,000 jobs, a third of what it had just in the last report in the way of increases. That's a lot. So how did this affect everything? Well, the dollar was everywhere, 103.56 to 102.75 and a half. Crazy markets is the only way I can describe it. One of the things I told traders the past 4 or 5 days, I said, I know that I've got trades out that are going to give money up. And I will be wrong because when a trend ends, you can't possibly get out at the high or if you're bearish at the bottom. You're going to give something up, and that is very typical. That was today's type of trade, I think, across the board in a lot of markets for a lot of traders. When you look at the gold market, the one thing that the market is doing is it's staying over the 18-week average of closes, which keeps the bias to the upside. Second thing, does that look to you like you're getting a trend or anything developing? I'm not convinced it does. You have a higher high. You got up today to 2074.60. Right now, you're back down from there already, $17. So it was quite a slip back that you're seeing in the marketplace. When we look to see where the bias is, you're over the 18-day average of closes, but you're nowhere in that type of trade. You're at the Bollinger Band high. The market failed there. Do you disagree with that? First challenge of it, what do I teach? The first time you hit a Bollinger Band, out you go in the marketplace. That's what I teach. Momentum coming up. So where are you in gold? One of these. Overall, it's still a market that's at 2056. There's nothing wrong with that. But it's not back up here at the 2150 area. It's $100 an ounce cheaper, and that's probably where it stays for a bit. Now, something else happened today. The gold-silver ratio is snapping back where it's basically trading at the 18-day average of closes, but if it closes over it, that means that silver may have run its course, gaining on gold, and the market's ready to settle down. Why? Well, you got up and you can see you're challenging the 100-day average, the upper Bollinger Band. Trend is still up. Support's right here. You had a big outside day down in silver. That means you took out the prior day's high and low. You closed lower, but you didn't really turn the trend down. The market is sitting here with, I think, still a market that's spinning sideways, has upside bias, but these Bollinger Bands have narrowed in so much that you generally don't go anywhere when that happens, and you churn traders up. In the copper market, again, the market, nice rally, came up to the upper Bollinger Band, and you know what I tell you, when you hit that, you back away. The interesting thing is today I was recording chapters for my new charting course on Bollinger Bands, so this all fit right in with what I'm doing, and I was changing PowerPoints and doing a few things so that people would get a better feel. You are a bit overbought right here. In the platinum market, the trend is up. Look for support at 919.80. But to get there, you got to get out of the 922.10 level. You'll step out of the uptrend if you do that. The bigger resistance is up here, just not seeing an awful lot one way or the other. Last, the dollar index. So the dollar index is falling back into the support of the 200-day average in the 18. The fact that the Fed wants to keep interest rates higher for longer is a bit supportive of that market. I think that's the only way that you can look at it. That doesn't mean it's good for the economy, but it is good for the FX part of it because higher interest rates a bit longer gives a bid into the dollar. You know, one of the things I want to remind you, if you want to get my morning subscriber videos, they're right in front of you here. You're watching me on YouTube, for example. You'll see on the bottom over here, click subscribe. That's how you can do that. And then every time I put them out, you'll get a notice out of YouTube. Update is posted for you, and you can watch the morning subscriber video. Pretty easy for a lot of you that are in foreign land, and you want to do it that way. I'm Ira Epstein. I'll catch up with everybody in the morning, obviously. Watch the rest of these videos tonight, and I'll talk to you first thing 8 a.m. or so in the morning on Thursday. Take care.